With so many high-yielding ETFs across the stock market, it can be tough to sort through the noise and invest into something that offers consistent dividends north of, let's say, 8%, but also offer a stable foundation in ETF price without massive price decay. Now, in this video, we're going to go over one of my all-time favorite higher-yielding ETFs known as JEPQ, and I'm going to explain why after my 7 years dividend investing, this ETF has made it to the top of my list. Then later on, for those that stay towards the end of the video, I'm going to share with you how many shares of JEPQ I currently own and show you exactly how much in dividends I make per month. Now, if this interests you at all, make sure to please drop a like down below, stick around, and let's get into it. Now, without wasting any time, heading over to the JP Morgan website, which is who manages JEPQ, it says JP Morgan NASDAQ Equity Premium Income ETF. And JEPQ's overview says designed to provide current income while maintaining prospects for capital appreciation. That's one of my favorite things about JEPQ, even though it does offer a substantial dividend yield and it has been paying a consistent dividend on a monthly basis, which you're going to see later on in the video. This ETF also prospects for capital appreciation, which means, of course, even on top of the dividends, by owning this ETF, you could earn some money off of just the ETF price. It then says generates income through a combination of selling options and investing in US large cap growth stocks, seeking to deliver a monthly income stream from associated option premiums and stock dividends. It then says seeks to deliver a significant portion of the returns associated with the NASDAQ 100 index. But very important here, with less volatility. So by investing into companies within the NASDAQ 100 index, you are most likely going to see some growth potential, at least when these names do well. But even during times when some of these names might not perform all that well, you are going to have less volatility because, of course, this ETF has an option overlay. Next, digging into this portfolio, the amount of holdings, and the top 10 holdings. JEPQ's top holdings as of right now, around 8 or 9% of the ETF is currently Microsoft. Then we have a massive portion of Apple, Google, Amazon, Nvidia, and Meta. So it's no secret that these names, for example, are going to be higher beta, which means they're going to trade a little bit outside the lines of the general markets. But as you can see, when the market turns and starts to do well again, you can see JEPQ has definitely benefited from that. And with the overall strategy, this ETF is up 21%. Not even including dividends year to date. But a very important aspect when it comes to investing into a higher yielding ETF, of course, is going to be exactly that, the dividends. Now, I started buying JEPQ over a year ago when this ETF was paying over 50 cents on a monthly basis, and keep in mind that was upwards of 10, 12, 14% yield at the time. But since then, the dividends have sort of gotten smaller and smaller for the most part, up until pretty much as of recently. The dividends were sub 40 cents on a monthly basis and now just right above it. And without taking up too much time and going too deep into it for this video, JEPQ is going to pay a different dividend amount on a monthly basis, and it's going to depend on how the portfolio, the underlying trades within that given time frame. But generally speaking, during times of heavier volatility, premiums from options are going to be inflated, which means JEPQ or other covered call ETFs could benefit from that. But during times like earlier this year, back in May, June, and July, when volatility was very, very low, you can see the dividends also corresponded to that. But honestly, even with the lower dividends as of recently, JEPQ still has over a 10% trailing 12-month dividend yield. And not to mention, once again, this ETF is up 21% year to date. So everything we went over so far paints a pretty rosy picture for JEPQ, but one of the main reasons on why this ETF is my favorite covered call ETF, or one of my favorite higher yielding ETFs across the entire market in general, is the fact that the holding breakdown is as follows. Technology makes up a majority of this ETF at 50.41%. Then we have a smaller portion of communication, consumer cyclical, healthcare, and consumer defensive. The top 5 breakdowns make up a majority of this ETF. So you might be asking yourself, well, what's so special about technology and why does JEPQ have so much of its overall holdings based in it? Well, the great thing about tech stocks in general is that they're known to potentially deliver significant growth. With technology advancements and innovations that are continuously going on, there is crazy opportunity in the market to make a lot of money and some major moves in the technology sector. Now, with the JEPQ ETF being so heavily invested in technology, it is definitely going to have a much higher beta. Now, market beta, also known as systemic risk or equity beta, is a measure of a stock or portfolio's sensitivity to the overall market movements. So beta is a commonly used term as far as risk indicator. A beta of 1 indicates that the asset or portfolio tends to move in line with the overall market. If the market increases by 1%, the asset or portfolio is expected to also increase around 1%. Now, with JEPQ's holdings being majority technology, that means that this ETF is going to have a much higher beta, again, compared to something like JEPI. Now, this can definitely be a good thing, of course, when the market moves up. But when the market moves down, once again, something with a higher beta than 1 is also going to move down more significantly. So if you combine the cover call strategy, but also the underlying holdings, the fact that a lot of these individual stocks are higher beta and do have the potential to move, especially when the market does well. But with that, of course, keep in mind there is that cover call overlay, which means some of the potential upside will be capped, but also volatility will be slowed because of that. For those reasons, this ETF is one of my favorites because I feel like it sort of offers everything all in one that a lot of other cover call ETFs are sort of lacking. It offers an underlying basket of holdings that do have growth potential, but a cover call strategy that can sort of be used as a backstop if things turn for the worse. And a system, generally speaking, where volatility means higher dividends. And with this ETF pretty much offers all in one, which is why I've been personally buying it so heavily over the last year. Now, before we dig into my personal portfolio when it comes to JEPQ and some of the dividends I've been paid over the last year from JEPQ. Looking at JEPQ's total return year to date, this is dividends plus price return included. This ETF is up 32.59% over the last 325 days. Now, I can't speak for everyone, but I'm honestly pretty excited about an 8, 9, 10, 12% return on a yearly basis. So of course, for me, 32% total return year-to-date performance is honestly amazing. And although it's hard to know what's going to happen in the future for JEPQ, I think the future looks pretty bright, especially for those investors that aren't necessarily trying to get rich overnight. Now, the last thing I want to share with you guys is my personal portfolio when it comes to JEPQ, how many shares I have across my portfolios, and even some dividends that I was paid throughout the last year. Now, across all my portfolios as of this moment, I think I have 500 or 600 shares of JEPQ, and I will definitely be buying more on the next pullback. And as you can see, over the last year, I've been buying more and more shares like crazy, considering I was only getting paid in this specific portfolio, for example, around $20 or $30 on a monthly basis. And then as of recently, as I bought more and more shares, now I'm up to somewhere of around $125 to $130 in dividends on a monthly basis from JEPQ ETF, and that's only one portfolio. I do in fact have this ETF spread out across multiple portfolios. Now, like I said, I will definitely be buying more JEPQ on the next pullback, hopefully somewhere around $45 per share. But until then, I'm sitting pretty good on my shares of JEPQ. I'm up quite a bit off my average cost. And until then, I'm just patiently sitting back and earning dividends along the way. Because of JEPQ's potential for massive capital appreciation in the future, because of the higher beta, high quality basket of holdings that this ETF has, and on top of that, the significant, consistent dividend that JEPQ has paid since inception, this ETF for me personally is a perfect staple to have in my long-term dividend growth portfolio. Now, if an investor, not like myself, is not all that interested in getting paid on a monthly basis, and wants to invest into an ETF with higher overall growth potential, well then JEPQ might not be the right investment vehicle for you. But for the investors out there, like myself personally, that are looking for a high quality ETF with rock solid holdings that pays a great dividend on a monthly basis and also has the potential for some massive upside, JEPQ is definitely an ETF worth looking into. But now I want to hear from you guys down below when it comes to the JP Morgan Nasdaq Premium Income ETF or JEPQ. Is this ETF currently in your portfolio? Comment down below why or why not. If you enjoyed this video, make sure to please drop a like down below and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.